Hello, welcome to McBoss Capital channel. My name is Michael Chu. This is a market recap video for the week ending December 6th, 2024. So this is the Nasdaq weekly chart, and we have come quite a way from this pullback here in the summertime around August, and then we have started to climb around. You can see here second week of September. And from here, we have only had two down weeks right here. And then we continue to make new highs, and we are around 13 weeks rally right now. This week, you can see Nasdaq had a really, really good week. It was kind of performing relatively lower compared to S&P until this week. And this week, a lot of like tech stocks, especially software group, has really taken off. So here you can see the RS line now has improved and make new highs. So right now Nasdaq is look like it's coming close to this 20,000 mark. That will be quite a milestone. The S&P also making new highs here. Also very similar rally here around the same number of weeks. On the daily chart, S&P also have a good week, making new highs. Now we are past 6,000, sitting at 1690. So here's the equal weight Nasdaq 100. Just want to see if the breadth is still okay. It didn't make a high on Friday, but overall, still doing really good, sitting above the 10-day. They did have some volume here, but hopefully, this is not the top here on Wednesday. We'll see. On the equal weight S&P 500, there is a difference here. Look at how it's now kind of on a downtrend. So this week it has fallen back, even close below the 10-day on Friday, and slightly on Thursday. So that's not a good sign. So in terms of market breadth, we may be seeing some narrowing happening. Looking at the Dow Jones, we have come up to the 45,000 level, but look at what happened this week. We are finding lots of resistance at this level. It has tried multiple times here this week, and it just couldn't go past it. In fact, it make kind of intraday low here this week, which is not so good. So right now it is sitting above the 10-day green line here. So hopefully it can hold this. If it starts to fall down, then we may be, into a deeper pullback here, just like right here, and it might hit the 21 day, and we might even see it go to 50 day. I don't know, but just be aware that this could happen if we do kind of fall apart here, because it's been, I don't like seeing how it tried 45,000 multiple times here and it just couldn't surpass it. So for Russell, we see that, we recently broke out here, went to new high, but then it falls back hard, really hard. Then we start this rebound and it make another new high, but then it is now slowly coming back, pull back right here to the 10-day. Thursday we went below it, but Friday we try to close near that line. We're still on a temporary short-term downtrend. Now, this pullback looks normal because it's not volatile like here. So that's a good sign. So now we just need it to kind of go back above this trend line, and that will possibly, continue its uptrend here. We'll see. So we also look like to see the New York Stock Exchange events decline line here. It is going down just like the S&P itself, on the RSP. So we are seeing similar narrowing here, which is not a good sign for S&P. On the Nasdaq advanced decline line, we are seeing also sloping downward right now. Not It doesn't look as bad as S&P just coming down many days now. Whereas this one, it did try to bounce on Wednesday, also bounce on Friday. So we'll see. Generally, the Nasdaq advanced decline line has been more subtle than the S&P, where it's continued to climb highs. So now that it kind of has a weaker picture here, kind of weird. So it's possible Nasdaq is taking the lead here. Whether S&P will continue to go down in terms of breadth, I'm not sure. We'll see. But it's just a divergence here from many months now. We see this is the time I noticed that this is happening more evidently in terms of 5 days down straight. So it is something to pay attention to in coming weeks, whether Nasdaq will continue to lead and S&P continue to fall a little bit and take a backseat, or whether eventually Nasdaq will also succumb to some selling pressure and forcing it the decline line, events decline line to drop as well. And just beware because when it does drop, it usually drop really fast. You can see here all the drops happen really fast. So in a few days, if we have a pullback with this week, it could drop even to new lows. So we gotta be conscious of that too, because it has been lagging the S&P New York Stock Exchange line for a long time, and now we see this divergence. Like I said, it's good right now for this week for a lot of tech stocks, but whether this can continue, I don't know, or is this a 1 week thing? But let's just say it will continue, then we at least know which area to be more focused on. Here's the Investment Business Daily newspaper talking about the hiring job numbers here. It added 227,000 jobs, which is quite high. And this is after October's 36,000 due to storms and strikes. So the hiring trends and high unemployment bolster the case for a Fed rate cut on December 18th. The jobless rate right now is 4.2%, and the average hourly earnings is around 4%. Here's the CME Fed Future Fund rate for December 18. Right now, it's 86% chance of decreasing the rate by a quarter point from 450 to 425. So 86% chance is pretty high. So the market looks like it's gonna, you know, continue to act well because of this, as we look forward to this rate cut. This is the 10-year yield chart. Looks like, after Friday's job report, it took a new low right here and it dropped below 50-day for the first time in a while. So this could be also another sign that boosts the market in general as this yield continue to come back down. So that's kind of good news in terms of borrowing rates and stuff. Looking at the US dollar, it also kind of stabilized a little bit. It is in a downtrend, so this also helps some of the companies in terms of trading with US dollar. So right now it's stable, so it may be a good thing. So we'll see how it trades in the coming week. Looks like a pendant is forming. Generally, a pendant forms, we will see a move after that, whether up or down more significantly. So the oil price, you can see here, seems to taking another tumble this week on Friday here. So it is on a downtrend, and it continued to make this lows and getting tested. In terms of the gold price, it looks like it's also on a downtrend right now. You can see right here, it fell to continue its run here, and now it has stayed below this trend line, and it's coming closer to the lows to test the lows here, and it's below the 50-day, which is the red line. So this next week, we have some data coming out. We have wholesale inventory data Monday. U.S. productivity reading Tuesday, import price index Friday, but more importantly, CPI consumer price index scheduled for Wednesday. Headline CPI is rising 2.7% year over year, while core prices are expected to post annual of 3.2%, and it is due Thursday on the producer price index as well. You're gonna look at some ETFs right now. IBD 50 broke out right here, climbed to new high, then it kind of broke down here, then it continued this run since. So it looks really nice here, very sharp as well. So growth stocks in general are moving. So that's a good environment to be in for growth stock investors. Looking at the home builders, as the 10-year yield dropped, surprisingly this didn't jump at all this week. Not a good sign. And it's now below the red line as well. We've seen how it comes under the red line, usually it bounces back very fast. Here it didn't, and then it stayed in a correction mode for a little bit. And so this base has fallen so far. It hasn't broke out right here. That's another negative. And now we've fallen below the 50-day. That's another negative. So we'll see if it can bounce back very fast. But so far it hasn't shown any sign of that. The technology sector making new high this week, not surprising, especially with the software group. We'll look into that more in detail near the end here. The retail is just digesting here at the 10-day, looks really strong, especially after this move up. It's able to come back to the 10-day, but on a sideways motion. So it looks like it wants to continue this run. Consumer discretionary, this chart looks amazing. We have this run right here, pulls back to the 10-day, and then we have this run. Now it looks a little bit parabolic, and so it's quite extended. Um, yeah, and there's lots of travel stocks, like, we can talk about that in the next video. Please follow. Industrials have also taken a little bit of a backseat. We saw that in the Dow Jones, and we're seeing here in the sector as well, ETF. The health sector hasn't moved much at all recently, which is not a good thing. And we saw lots of stocks corrected pretty deep, but now it's starting to come back down again. So this is not a good sign. And it broke all the short-term moving average once again, and we have this huge resistance line here, and we see the 50-day now starting to slope down as well. So we saw the US oil price earlier has dropped. The stocks ETF also dropped quite a bit here. So not looking good, and it also fell the red line 50-day here. The mining group also not doing as well, so it also dropped quite a bit right here. And the financials are also coming down as well, so that also looks a little bit weak. It is hovering over the 10-day, but so far I haven't seen any sort of rebound. The volume did dry up on Friday, so we'll see if we can get a rebound here. But there's a chance because the volume did dry up, so we'll see. The insurance group also has taken coming back down as well, very fast. Same thing with the regional banking group, also falling back here. The real estate group also fell to breakout right here, and now it's on the downtrend as well. So yeah, the financials are really rocky this week. And so far there's no bounce whatsoever, so it could continue this downtrend. And same thing with the utilities. It has also gone in a downtrend mode. You can see it couldn't even come back up to Thursday's move, and it dropped even lower. So this is not a good sign. So it appears that most sectors actually not doing as well, even though we have a new high on index S&P, Nasdaq. But you can see underlying, we see lots of sector area that are kind of not doing as well right now. The ARK fund, ARK Innovation, which kind of mostly growth stocks, are also doing really well right now. The ARK Genomics fund, it's coming back above the 200 days, so this is tested right here. So if it, we have the closing high right here, so if it pass here, that'll be a really good sign. So this is the Vanguard Semiconductor ETF. So the overall this week it came back above the 10-day moving average, and as well as the red line. It did kind of close near that level on Friday. So it hasn't been able to move too far away from this line. So far it just looked like it's stuck in a range bound trading here. We have this new recent low right here, which is not a good sign, but like I said, it has bounced back this week into more in the middle ground right here of this like long handle, so-called handle. So it may be stuck here for a while, who knows. So we also see the same, it's almost similar type improvement in Nvidia. You can see right here, it moves back up on Wednesday, and then by Friday it did come back down to near that line. So hopefully it can bounce again once from here. Volume has really subsided, so we'll see. If we do go higher, we want to see volume coming in to support this. I mean, it is not far from a high, 152. So it's trading very tight. It looks okay. It looks good, okay, right now. We haven't moved much since this base. That's the only thing that I find weird. But it is a long base so far. Another one I pay attention to is Taiwan Semiconductor. So you can see it's starting to build this nice right side of the cup base here. It's moving up really fast. Look at Friday how it traded. It come lower, but then it bounced and closed at the top. And also on lower volume, which is less people want to sell this stock. And look at the higher volume in the previous days. So that's a really good sign. This if this either break out or form another handle near here, that's not a bad stock to follow. ARM right here, it's kind of holding tight. I don't like this action. Generally, if it comes back on the right side, you want it to move faster or at least at a normal pace. This is like really slow pace. I don't like that. AMD is also not doing much. It's just really not moving at all. So I don't like this action. This is what I sometimes call the L L-shaped pattern, which is quite bearish. So there's some other smaller cap, less big, not as big chip stocks that I have on my growth stock list. So please follow that video. So where the market really shined this week is in the software tech group. You can see it continue to make new high. This is very healthy action. You can see find support here at the 10-day and then make another high, and then here we found support again a couple of times, and then it make new high again. So it's been very healthy. And look at the volume on the blue bars. There's obviously some selling on the left the red volume as well, red volume bars. So but overall it seems like there's more buying than selling. So hence it has moved significantly right now. So this is the strongest group. We will look at more of the smaller ones in my next video. But for the big caps, let's start from the top. Let's start with Microsoft. So Microsoft is finally moving. This looks like it broke this downtrend line, and now it's moving up nicely. And the 10-day slope is pretty strong, 45-degree angle at least. Then we have Meta breaking out right here. This is also very healthy. Look at the volume on the blue bars and versus the 2 down days on the red bar. What is difference? Looks like this is also on a really strong slope. This is 45-degree angle as well, almost. Look at Amazon. This thing just finally moved, and when it moved, it kind of shot up. Right now, it looked a little bit extended, like almost like a little bit of a parabolic move, just a little bit. But overall, the 10 line is trending quite good, more than 45-degree angle. Look at this volume on the buy side. Look at the volume on the sell side, much lower. So we just saw three mega caps, software related stocks that did really well. Now we have Google. It is climbing back, but much slower pace than the others, right? And it's also still quite deep in this cup. It hasn't really come back up as fast as you would like. But overall, it is happening healthy right now because it's above all the short moving averages. With Apple also making new high. Look at this. Also pretty strong slope as well. 45-degree angle. We have Tesla making new highs here. Very nice. And it found support at the 10-day a couple of times so far. It looks a little bit parabolic right now. As you can see, the 10 days curving up like really strong slope. And finally, we have Netflix. This one has been performing spectacular. Um, it's one of the first one to come out right here, and then it pull back right here. Then it has climbed up. Look at how many days? 8 days now. Continue to climb up nicely. The slope is also very good, 45-degree angle. Thank you for watching this video. If you like it, please subscribe and comment any stocks you want to look at from me. I will look at it next time. I'm going to come out with the next video that talk more about my growth stocks list that I follow. Please enjoy and watch that. Thank you.